Hey, beautiful people. Hope you're doing well. I wanted to get on here to share a point. A good friend asked me a question recently, and I thought it was such a great question. And knowing the answer could be a huge benefit to you. So I wanted to talk to you guys about it, hopefully give you some value. With that said, I had a great friend of mine come up to me and said, Raymond, I own a home. I have a mortgage payment. What should I do? Should I put money into the mortgage or should I do repairs? Let's say in theory you have a lump sum and you want to somehow help your real estate holdings, whether that's your home, whether that's a rental. What do you do? Here's two frameworks to think about when making this decision. Now, the first framework is the loan payment. Let's say you have a mortgage. Depending on your interest rate, you want to look and see, okay, if I make a principal payment, you're paying the actual principal itself, the actual loan that you took out, let's say for $300,000, you're paying on that. What you're going to find is you have a compounding strategy that works in your favor that will help you pay off a larger amount of interest in the back end of the loan. So let's say you're paying on $300,000 in a 30-year amortized loan, you're going to pay a couple $100,000 in interest depending on your interest rate because that is compounding over time. Now, if you make a large principal payment towards the $300,000, so now it's $200,000, you will also compound the savings you earn over 30 years and pay significantly less in interest. Now, here's the downside though. Most homeowners statistically own their homes from anywhere to 5 to 7 years. So if you're not holding it for the full 30-year time frame, you're not going to see the entire benefit of making that principal payment over 30 years. You'll still receive a benefit, but it won't be the couple $100,000 that you might save by making that initial investment in your mortgage payment. So that's something to realize. You can get on any mortgage calculator and you can punch in those numbers and see how much you would save, especially if you're only expecting to own it within that 5 to 7 year time frame. Here's the second thought, is making repairs in the home. Now, I get this question a lot. I work with investors. What sort of things should I do in my home to help me get a return on my investment? And this is great because it comes into this is more of a woolly area, but this has larger upside. Now, the benefit towards doing repairs on the home itself is you can have forced equity or immediate equity that you can sell, let's say 6 months down the road. So let's say I'm going to do a repair tomorrow. I can still realize those gains tomorrow if I decide to sell. So they're locked in. Now, here's the only downside, is that the comps in your area dictate the return you get on your investment. So the best way to do this is to find your home. You know what it looks like, you know the condition it's in. Find comps, or have your competent realtor find comps that are in better value in your area. This will give you what we call an ARV, or after repair value. Then you can do the spread of how much my home's worth now to how much it would be worth if I did certain fixtures, if I did an interior remodel, if I did a kitchen remodel, if I put a new roof on, if I did an exterior paint job. Then you can see, okay, I now have a spread that I can work with. And let's say you do a $20,000 roof, but it yields you a $50,000 increase because comps in the area can sustain that. Then you have a return on your investment that you can actually calculate. And with that, then you can choose, okay, should I go the repair route and have my ARV and do certain expenses like that? Or should I go down the mortgage route? Hope that helps. You guys have a great day.